It's exactly the reason why we obviously we'd never want to expose the people from many years ago that don't want to share their stories publicly. But it's great to see the high level detail of numbers, effectively the stats, to see that there are plenty of other people out there stacking. It just they don't want to shout about it, which is fair enough. And you are completely right as well with the companies that are stacking. You will, if you live in the UK, you will have likely walked into some of them shops, used their products on sometimes potentially regular basis without realizing. But some of these companies are buying Bitcoin or have done from many years ago. So yeah, it's quite surprising, but it's good to see. Hopefully, this day that they can see some of the categories. For example, we've got retail high street shops. You've got nursing homes. You've got I think there's even charities in there. There's quite a few charities, I believe. There's your local cafe down the street, your pub down the street. There's such a range of businesses. There's a building company. Everything you can think of. The range is so vast. It's not a particular category of businesses that are buying. I think, as you touched on before, Robin, you mentioned that it could be a CFO at a company that's a Bitcoiner, and that's the reason why that company has it. But it could be a CFO of a large nursing home chain, for example, and that is why they are buying Bitcoin. It's irrelevant of what the business is as such. It's the kind of the people and the decision makers in the business that are driving the adoption of Bitcoin there.
Why do you think they're quiet about it? There are companies that are very open about it. They make marketing for it, as they've seen that it doesn't shock the existing customers if they are saying they're Bitcoin, putting on a balance sheet, and it maybe attracts some new customers that want to buy at a shop that has Bitcoin on the balance sheet.
I think there's been it's probably quite a range over the years. So if we look back to, we had a customer, I won't name the merchant, the business, but they were selling e-bikes and they were accepting Bitcoin with us, but this was back in 2021 maybe. And it was just around the time I think Tesla had accepted Bitcoin payments, and then they pulled it for environmental issues. So this company that were about to launch accepting Bitcoin, it was only a couple of days before they were planning to launch. The Tesla news came out, the environmental impact, and they decided to stop and scrap it off because they were worried about what their customer base, being an electronic bike sort of company and good for the environment company, they were worried what their customer base might think when they start accepting Bitcoin. So some of them, the ones that are especially accepting Bitcoin, a lot of them do want the PR from it. They want the attention, and that's a great thing for them. But the ones generally that are buying Bitcoin in the background, probably 95% of them don't want to tell people, and they're happy to just sit in the background and buy Bitcoin because it doesn't really necessarily impact directly the PR and the attention that they would get and the customer base that they may attract from that. I guess they're maybe not seeing that as a big enough uptick, as opposed to maybe the privacy that they're happy to keep. Maybe they don't think about the marketing angle and the PR side of things that they could introduce with this. I think it is, unfortunately, there's no one answer. There's a wide range of things where people don't want to tell people because of all the above reasons I've mentioned there, the environmental impacts, the banks. We've even had it in the past where they almost don't want to flag it and highlight it because their banking relationships may be squeezed. We have had that in the past, and the UK is no exception to the rest of the world of what we've seen in terms of banking restrictions and banks closing accounts down for every reason possible. Obviously, CoinCorner being a Bitcoin exchange, we've struggled with banking over the years. My personal accounts I've struggled with the years because of my association with Bitcoin. It's not easy. So businesses, when they look to buy Bitcoin, of course, the bank will see the transactions going through. But if they make a song and dance about that publicly, then that bank may start to ask more questions and begin to. We have had them close accounts in the past. So yeah, there's so many different reasons. Everybody's different. It's hard to pinpoint a single one. That's the biggest one, I would say, biggest reason.
That's super interesting. And that report that you are putting together, you're basically collecting all the data that you have through the CoinCorner platform, and then you're basically trying to see the buying behaviors and the behaviors of the people. What are you seeing? Is that a more short term focus, or also more on the long term of like bear markets, bull markets?
So I've got the report in front of me here. So let me just flick through and tell you in terms of, there's a couple of points on it that might be useful from a average transaction. So obviously 10 years worth of data in some respects. Some of the companies obviously are newer than 10 years. So they maybe have signed up and registered in the last year or two. But the average transactions that the business has made over the lifetime, which could be anywhere from pretty much 1 year to 10 years, the average transactions was 97. So a very high level average over a 10-year period. It looks like one a month in terms of a DCA in that respect. So it's roughly about one a month from each business's transactions. So I think that in itself has showed slow and steady purchases of Bitcoin over the years. There's another, I'm flicking on this because I know there is some good stats to sort of tie in with that. The other one, which I was quite impressed with, was the 60% of the businesses from the sample had never sold Bitcoin. So they've only ever bought Bitcoin, which is obviously, from a long-term perspective, slow and steady long-term, and not selling. So yeah, there's definitely a good portion of the businesses that are just buying slow and steady over the long term. There's probably a very good portion, hard not to say too much, but there's a good portion that are old businesses that accumulated Bitcoin from many years ago, from even like the 2014, 15, 16 years. And they accumulated quite a lot of Bitcoin. And then over the last couple of years, as the price has gone up, they've just been selling small amounts as time's gone by. Sometimes, so you'll have seen with Peter McCormack and his Raoul Bedford and the approach he took. He called his conference cheat code in the sense of the mentality of buying Bitcoin and putting it on your balance sheet for a business is a cheat code to running a business, because theoretically the Bitcoin value will continue to go up, which means your balance sheet of your business continues to increase, or even can potentially stay static for as unlimited years in the theory. So what we've definitely seen is some of the businesses that had bought Bitcoin years ago had been effectively slowly over time selling Bitcoin along the way over the years, effectively to bump up their balance sheet and allow them to continue to maintain the business in years where they've had a poor year, and it kind of pulls them out and allows them to continue operating without the need for any debt or anything along them lines. CoinCorner is probably one of the best examples in some respect of that, being Bitcoin, or the Bitcoin industry. Obviously, we have 4-year cycles. So we have a 2 years of bull, a 2 year of bear. And during the 2 year of bear, you'll see in the industry, in the crypto industry especially, you will see the likes of Coinbase, Binance, etc. This time, was it 2 years ago? They were just laying off so many people, scaling back, volumes dropping because there's just no customers there anymore, because the market's back into the bear market, and they have to scale back. They have to go and take lots of external funding, whether that's from venture capital side or wherever they're getting the debt side from. Whereas ourselves, CoinCorner, we've been fortunate where we've been able to accumulate the Bitcoin in the earlier stages, and then during the bear markets, we're able to kind of bunker down and allow us to maintain through the bear markets. And if required, we can sell some Bitcoin to maintain and sustain the business of where we are, allowing us to keep and never have to lay off staff, keep the staff numbers as we are, grow slow and steady, and then be prepared for the bull market and kind of hit the ground running with the team that we have, as opposed to trying to panic hire lots of people when the bull market comes and then lay off when the bear market comes. So it's allowed us to be a bit more, our revenue line, should we say, and kind of everything's been a bit more slow and steady and flatline in some respect, not flatline, but more consistent. It's probably a better way to word that. Over the years, as opposed to what you will see with Binance and Coinbase, etc., is very much a roller coaster alongside the hype cycles. So having Bitcoin on the balance sheet has definitely been beneficial for CoinCorner, and as I mentioned there, some of the other merchants within the sample, very similar behavior where they've been selling during their bad years of business.
That's super interesting. It's also fascinating this bull and bear cycle with businesses, because it is kind of a weird sign for the outside world also when you hear in the bear market, or like those many layoffs in that company, those many layoffs in that company. It's like, okay, is that industry really good? And I think if we get more to a state where companies in Bitcoin and, and hopefully we make the distinction between Bitcoin and crypto more and more, because it's still that the general population, I feel like, has crypto within Bitcoin, and it's the same category. So we have to make the distinction in between there. But people see that. Is that an industry where there's a lot of layoffs and a lot of hype, and those cycles are huge? Or is it where there are businesses growing that are slow and steady? So I think what you're doing with CoinCorn is really cool, because it shows a slow and steady growth where you can capture actually the bull market, but don't overdo it in the bull market, and then don't underdo it in the bear market. And I think that's the Bitcoiner way. And the other thing is more the, let's call it the altcoin way.
Yeah, it is exactly that. And it kind of ties into, there's another point that we've, or some of the data we've noticed, it's not been released yet because it's more of the retail audience data that we're going to be releasing in the coming weeks. But that one, very similar to what you're saying there in terms of our customer base is that slow and steady customer base. So our customer base, we've realized, is the older generation, should we say. When I say older generation, I'm talking sort of millennials onwards, millennials, Gen X, boomers. Whereas when we've looked at the crypto audience, should we say, which is like your Coinbase, your Binance, etc., that crypto audience is Gen Z and slowly bleeding into millennials. But the majority of their customer base is Gen Z and millennials, as opposed to ours being much older. And I think that's where the differences during the bear markets, the Gen Zs, etc., they've tried to get rich quick, I guess, on crypto. They've got burnt or got bored, and the markets come down, so they disappear and they forget, and they're distracted and go off with something else. Whereas the customer base we have continue through the bear markets, just DCAing over the time. So it becomes the slow and steady customer base, which allows us to maintain that level of consistency throughout the years. So it's definitely a difference between Bitcoin and crypto, is an age gap quite heavily. And I think with age comes risk, maybe. So the younger you are, the higher risks you'll take, as opposed to as you get older, you begin to take lower risks. I think that's just a natural human behavior. And that's exactly what I think we're seeing with that, where the older generation are happy to buy Bitcoin slow and steady because it's less risky than crypto. So it's a good differentiation, and I'm quite looking forward to getting that sort of data out so you can show the differentiation between a Bitcoin company and a crypto company.
So also the age is quite interesting, because I'm a rare Bitcoin. I'm 26. It feels like so when I look at my own channel statistics, and I have around like 100 to 150k people watching in like a 1 month or 3 month period. So it's not the biggest pool of people, but it's somewhat representative of Bitcoiners, and under my age, there's almost nobody. So like there's like 1% of my viewers are younger than me. So like 99% of my viewers are older than me. There's even like 7-8% that are above 65 years old, which shocked me actually that there are basically almost the generation between my dad and my granddad is kind of that one. That's super interesting to see. And I think the average age is somewhere between like 45 years old, 43 years old when I last checked. So it honestly, when I came into the Bitcoin world, it shocked me what the difference between crypto overall and Bitcoin is. And I think younger people are more skewed towards, oh, like let's gamble in some altcoin, just because they might not have a bigger responsibility of a family or company like that. What's your how do you see the age difference? Because you probably have way more retail data than I have just from YouTube.
It almost, I think, exactly what the age you've said there. So I think around 40 to 42 probably is about our average. So it is exactly what you're probably seeing. The Gen Z generation, so that's like 18. People kind of bracket them slightly different sometimes, but 18 to 25 sort of region, let's say. That is a tiny, tiny portion of our audience. It's maybe, I can't remember the exact number, but it's maybe about 3 or 4%, as opposed to millennials being the biggest, which is up towards 40, and Gen X then being second biggest, which takes us into 50s. But still, boomers being the 50s, at 55 plus, etc. The boomers age actually is still a lot bigger than our Gen Z. So I think boomers sits probably around 15% maybe, as opposed to the Gen Z a couple of percentage. It's quite the difference, which this is where we're trying to dig in at the minute and find research in crypto. All of the crypto surveys we've found, it's massively crypto is Gen Z. And the Coinbase data and the Binance data that we were able to try and publicly find. Again, it's difficult because they're not really sort of disclosing much of that. But the bits that they do is always focused around Gen Z being their customer bases, which is high risk takers, gamblers, which is crypto. And I think that's the differentiator between Bitcoin and crypto for me going forwards. It's just highlighting that Bitcoin is an investment purpose, and a slow and steady long-term investment, as opposed to crypto, Coinbase, Binance, etc., are your casinos. There you want to go and gamble, get rich quick. And they are two completely different business models with two completely different customer bases, quite honestly.
Yeah, I saw some. I'm currently searching it. There is there came something out of showing what the future shift in wealth is of like the boomers and the older generations are slowly going into retirement and slowly getting to the age where the wealth actually shifts to millennials and Gen Xers. So that shift is basically happening within the next like 10, 20 years. The number, I think, if I remember correctly, was like 100 trillion that comes 2 generations down, which is fascinating to see. It comes now to the generations where Bitcoin is more and more present and where Bitcoin is actually the more dominant form, which I think is super interesting to see, because it's the generations that control the wealth that kind of controls where the marketers are going, and it's sad to see that we don't have more in the Gen Zs, because I'm on the border, like I'm actually a Gen Zer, but it's actually for the next 10, 20 years not that important. It's more the millennials and Gen Xers and whatever comes above them, I forgot, that are really controlling where the wealth is going. And I think that's an interesting indicator of exactly to that cohort of people where Bitcoin is getting more and more dominant. There's the trillions incoming.
Yeah, it is exactly that, I think, and the millennials and the Gen Xers are Bitcoin only, as the majority, which is exactly maybe what we, in some regard, maybe would expect. But yeah, it's definitely interesting to start seeing this data now. It's kind of frustrating that we don't see more companies sharing more of that data as well, and sort of it helps with, it's like industry research, and you see the surveys. But the surveys are great in some respects, where you get a kind of an overview and average of some sort of feedback and initial data. But the problem with the surveys sometimes is obviously people can just make things up and lie. Whereas hopefully data doesn't lie, and data is accurate and correct. So we can, with the data, obviously we can then make use of that for research purposes. And it's great to then see and understand how the industry is evolving, how we can then start to figure out how do we help everything from like regulations and how you're helping differentiate Bitcoin and crypto. Like we can take these arguments to regulators and say, look, maybe they should be regulating the two separate, which is ironically one of the things that Gary Gensler in the US was trying to do, even though he became quite the enemy of the industry for a period of time, he was still trying to differentiate Bitcoin and crypto, which I saw as a positive. That was, in my head, that was a positive. I appreciate the administration at the time, and Gary Gensler squeezed a lot of the companies over there. But again, look at the companies they squeezed; they were crypto. They weren't necessarily Bitcoin. There was no Bitcoin only company in that list of companies they were targeting, because Gary did separate Bitcoin and crypto, and he saw Bitcoin as the commodity and more of the crypto being a security. So hopefully with this data, we can start to help, I guess, educate regulators, educate people, educate the general public, media, and help make use of that in hopefully positive ways for Bitcoin and to show Bitcoin's adoption.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.